Lesson learned from Buffett's missed good stocks attitude. One can learn a valuable lesson from Warren Buffett's attitude of missing out on good stocks. Have you ever waited for the right moment and refused to buy stocks that you had analyzed and found to be good, simply because the stock price was not low enough at that time? Or perhaps you hesitated because you were worried that you didn't fully understand the business from every angle? The act of hesitating or waiting for a price drop exists in every industry. Whether you go out to bargain and haggle at a flea market, or go shopping at a mall and wait for a sale promotion before making a purchase. Even in the realm of investments, many people often wait for stocks or assets they have set their sights on to decrease in price before investing, in order to minimize their costs. They forget to consider that the growth potential of that particular stock may cause its price to be incredibly cheap today. It can be considered as a bias that many investors have to overcome. In this video, my team has brought the story of Warren Buffett, who also refused to make investment decisions due to waiting, resulting in missing out on a significant profit. It's a regrettable tale that they want to share with you. How does the story unfold? Stay tuned to find out. Buffett missed a tech giant right under his nose. Warren Buffett, the legendary investor, is renowned for his expertise in investing only in businesses he truly understands, a strategy he often refers to as investing within his circle of competence. You would typically see him investing in stocks of consumer goods, financial institutions, or insurance companies, industries he is well versed in. He tends to avoid investing in technology businesses that he doesn't comprehend. However, this investment strategy caused Buffett to miss out on a major tech stock and left him feeling regretful. The stock in question is Alphabet, the parent company of Google. Buffett openly admitted during a Berkshire Hathaway shareholder meeting in 2018 that he had missed the opportunity to invest in Alphabet since its initial public offering, IPO, in 2004. Buffett and his partner Charlie Munger, analyzed Google's stock, but we couldn't come to a conclusion on whether it was a good investment, even though we already recognized its tremendous growth potential compared to the offering price, Warren Buffett candidly acknowledged later. He admitted that he missed out due to his own biases. Buffett also imparted a lesson to investors, stating, "We have countless opportunities and methods to ask questions or do something to gather more information for additional analysis, but we choose to ignore them." What's more disheartening is that Berkshire Hathaway, Buffett's company, had been a customer of Google even before its IPO. The insurance company Geico was utilizing Google ads at that time and was paying $10 to $11 per click for each advertisement link. Buffett was well aware of this expense and played a part in contributing to Google's growth. It can be said that Google's business was right under the nose of Warren Buffett and Charlie Munger, but they remained indifferent and unwilling to invest. "I made Berkshire shareholders miss out on money they should have had, and it's my fault," concluded Buffett. If we consider the current stock price of Google or Alphabet since its IPO, it has increased nearly 40 times. This means that Buffett missed out on a substantial amount of profit, which is undoubtedly regrettable. In addition to Google stock, there are several other stocks that Warren Buffett saw as worthy of investment but instead chose to await for a better price and ended up regretting it later. Buffett missed out on Amazon stock, another Google-like wound. Another example of this is Amazon stock, which Buffett has known for over 20 years and is familiar with and admires Jeff Bezos, the founder of Amazon. However, he overlooked investing in it because he didn't anticipate that Amazon's business would grow from being just an online bookstore to becoming a massive e-commerce platform and the world's highest-earning cloud business today. It's a tough thing for me, buying at 10 times the reasonable value. But I didn't think about the fact that they could transform the online bookstore business into selling many other things. He Jeff Bezos, had a vision that was broad and smart enough to make what he thought come true, Buffett revealed to Yahoo Finance. Up to this point, you might think it's normal for Warren Buffett not to invest in technology stocks he doesn't understand deeply. But in reality, even Buffett himself regrets not seeking knowledge about the technology business throughout his life to gain enough confidence to invest. It's pretty clear that my life would be better if I had knowledge about the technology business beyond this, Buffett admitted in an interview with CNBC. And just like before, the price of Amazon stock has soared from its IPO price of $18 per share in 1997, and has undergone multiple stock splits, reducing the IPO price to just $0.075 per share. But currently, the stock price of Amazon is around $97.50 per share. If you had bought Amazon stock with $10,000 at the IPO, that investment would be worth approximately $13 million today, or simply put, the stock price of Amazon has adjusted nearly 1,300 times in 26 years. It wasn't until 2018 that Warren Buffett's assistants, Todd Combs and Ted Weschler, finally decided to invest in Amazon stock because they saw the potential in the company's cloud business. In addition to Amazon stock, Buffett has also refrained from investing in several other companies that he understood early on. For example, he started investing in the retail giant Walmart in 2005, even though the company went public in 1970. Similarly, he has long admired the CEO of J.P. Morgan, Jamie Dimon, but only invested in the company in 2018. You can see that a weighting due to a bias against investing in stocks you've targeted, even though these stocks have proven to be good stocks at reasonable prices, may cause you to miss out on life-changing investment opportunities. Just like how Warren Buffett missed out on multiple occasions with stocks like Google and Amazon. Change of Buffett's perspective on technology stock investment. Even though Berkshire Hathaway missed out on investing in Google and Amazon from the beginning, in early 2016, both of Warren Buffett's assistants, Todd Combs and Ted Weschler, started investing in Apple stocks and made substantial profits. This marked the beginning of Buffett's shift in perspective towards technology stocks. In the Berkshire Hathaway shareholders meeting in 2017, Buffett revealed, "For Apple, I see it more as a consumer products business than a technology business." This perspective holds true because upon careful analysis, one can see that Apple conducts its business as a retailer of electronic products, utilizing existing technologies, including its distribution channels for music, movies, games, and applications. Currently, Apple stocks comprise the highest proportion in Berkshire Hathaway's investment portfolio, accounting for nearly 40% of the total investment value. It seems that Berkshire Hathaway is increasingly investing in technology-related stocks. Recently, it has also invested in TSMC, one of the world's leading chip manufacturers. Looking at Warren Buffett's past mistakes, it is evident that waiting for stock prices to drop may have its advantages. However, it can also cause investors to miss out on stocks that can potentially transform their lives, especially super stocks with strong underlying businesses and reasonably priced. One phrase that summarizes all the lessons learned from Buffett's "wait until the price drops" approach is, don't overlook certain attractive opportunities today because you believe you'll find something better tomorrow, as Buffett himself once said.